Joining us now at Post 9, Melius Group Head of Research, Ben Reitzes. Good to have you here.
Hey, David.
I can only imagine what you're dealing with in terms of your clients, given just every day kind of being whipsawed. But let's start off with the AI trade, if we can, something we've talked to you a lot about. We've had Jassy on our air talking about no slowdown in demand, said we're not attenuating the data center. Alphabet coming out, reconfirming sort of capex. Even Microsoft. Are you a believer? Are those good signs? Did things get back to what we thought they were?
Well, there's good signs. Like, I liked what Jassy said today. Also attenuating, I love that word. But I don't think that they are slowing down at Amazon. I don't think they're slowing down at Google. That's good. Microsoft's a little more debatable.
Yes.
They're kind of... They are a little attenuating a little bit, maybe, potentially.
That's what we all kind of hear, at least. Yes.
But it does seem like it's going to OpenAI and others. Oracle's picking up a lot of the slack. You see, David, there's a chance server prices really soar here, and storage and gear. So actually, the big clouds actually might be cheaper. So you might want to bring some workloads into the big clouds because on-prem gear could soar in price, and then they have a relative price advantage. So if I'm running a big cloud, I don't know if I slow down right now because you could actually take more workloads.
So you think you're going to take more stuff off of on-premise, where a company is saying, all right, we got to move more stuff to the cloud because it's just going to be cheaper.
It's going to be cheaper. And heck, I mean, if you're a big bank here in New York City, you have no idea what's going on. So it's like, why not leverage the cloud? Maybe it's cheaper. Maybe they can scale up and down, and you focus on something else, because it's so uncertain right now. Why pay 20% more for gear on-prem?
Right. I mean, some things, like banks, some things they want to keep on-prem, I would assume.
Yeah, of course. Yeah. But it was an example. But the price shock that we're seeing, we're seeing HP Enterprise and some of their competitors raise prices on servers. A 20% shock is a big number.
Is that the expectation? I mean, obviously a lot of servers come from a lot of places around the world, all with 10% now. I don't know how many are made in China.
Quite a few. Quite a few. And everything goes through there. It's really hard to determine what's going to happen to the price of this on-prem gear.
Well, I mean, you can't 125%. I don't know what you do. What you're going to do.
Well, that brings us to Apple, one of my longtime favorite names. I know it's getting crushed. I hope Tim and Donald are talking, and maybe Tim's got to invest a little bit more here to get an exemption because this is just too much. I think that also you got to remember with Apple, they employ millions of people in
Jim
China.
And I were talking about it earlier.
So, there is a lot of uncertainty out there. I'm wishing the best for Apple. I have a hunch Tim's on it, in a good way. And I think the cloud guys are going to keep going. But the on-prem stuff, you got to watch. There was a rush to buy in the first quarter. There could be a big slowdown in 2Q, 3Q because everybody's stocked up. So the clouds may be the best game in town. And the Mag 7, hopefully keeps spending.
So not peak capex, you don't think? We're not at peak capex?
For some people, but I think if you're in the cloud, you got a once-in-a-lifetime opportunity here. So you gotta be careful. If you're going to slow down, you may regret it in 3 weeks.
And then on Apple and some of the others you cover, I mean, supply chain is in focus with all the tariffs, and that's a pressure point. But what about demand? I mean, especially for a company like Apple and some of these others that rely on China, does this change that entire equation as well?
Yeah, we cut numbers on Monday. It was a little bit like put your finger in the air and try to figure it out. But China is going to go down. It's just a question of how much. It's already been hurting there. The nationalism and some of the concerns got to hit earnings for an Apple. You hope that slows. You hope that peters out at some point. But
you're talking about the domestic sale.
The domestic
China
of iPhones,
18-19% of sales. 18-19% of sales are in China. That's got to go down hundreds of basis points from where we were thinking. So we cut that. That is something we got to watch. But like I was saying before, the big thing that's going on right now is you saw PC sales better than expected in the first quarter. That's not real. Trust me, I'm looking at PCs every day. I mean, the AI PC is a bust. So that was
why there was so much hope for it.
Well, that's
Dell, HP,
you got me
so
on
excited.
for an hour here.
Yeah.
We're going to talk about that. But people are buying in the first quarter in semis, in hardware, and then we got to see how that goes in the second quarter and third quarter. And, it's a concern. That's why we cut numbers proactively, because at the very least, we know that's going to happen. Then we got to see what happens with Apple. But look, cooler heads.
If Apple doesn't get that exemption, what do they do?
Well, they're going to have to move here eventually, and
move here,
move production.
You make an
more.
iPhone here, it's going to cost.
Hey, look, there's talk they were putting stuff on 747s.
Oh, they were. There's no doubt they were
Yeah.
doing that. Right. They're trying to get 2/4 of inventory over here if they could.
They are. They're going to move
understanding.
more stuff to friendly countries, and they're going to be more flexible. But they are the #1 China-focused supply chain, and it's a big part of sales too. And they're going to have to move it over gradually. But I'm holding out hope. I think Tim can up that 500 bill number, and he could work with TSMC. He could I know Jensen's trying to do more here. So let's see what happens.
Important story. We'll be following it with your help as well, Ben. Thank you.
Hey, thanks for having me on, guys.
Sure.
Good luck to you.